Thank you very much. Thank you, gents, for coming out on stage. Vikram, that was very interesting and enlightening. Good to hear from you. And thanks for setting us up so well. Hopefully this discussion should be a slam dunk. Thank you all for being here this morning. I've spent a long time deliberating this topic. They gave me such a broad subject to look into, the future of banking. And we've sort of metamorphosed into discussing the future of finance in general. And these three gentlemen here on stage with me can talk about this from very different perspectives. Vikram, you've already heard from, and you have such a highly recognized career in banking, and you can talk to us about the journey that you've experienced, the juncture at which we find ourselves. Kai, you have such a broad-based understanding of financial services, having worked for so many of the big names in finance, and lots of really good stories about the practical implications of the implementation of FinTech in our world and the kind of world we're going to live in the future. And do share with us your stories about your brand new iPhone and what it can do and what that might mean for our future too. And Calvin, you are so enthusiastic about FinTech and putting a lot of big money, whether it's in Hong Kong dollars, Singapore, or US, into FinTech, particularly in China, and I'm excited to hear a bit more about that. So I'm going to stop warbling on, and we're going to kick off this conversation. Vikram, where do you feel that we find ourselves right now at this juncture in the finance industry, vis-a-vis the kind of technology that we can leverage for the future?
Well, I still think it's very early days, and Manisha, it's not a universal appraisal in the sense certain parts of the world are further ahead than others, and so there are parts of the world that are moving very fast. You can look at what's happening in China, but for the rest of the world, I think this is like what I said before. This was like when Netscape went public in 1995, and my God, Amazon happened a few years later, and look at how long it's taken Amazon to get to this point. It's a long journey. We're at very early stages, but it's there, it's happening. And because the pace seems a little bit long, it could take 20 years. By the way, nothing takes 20 years anymore, so it could be shorter than that. But having said that, it seems things are not moving fast enough, but they actually are. Underneath, there's a lot of change that's happening.
Speaking of which, I have 3 beautiful kids, and my youngest, in a little bit over 10 years, will have a very different experience to mine when I first opened a bank account. Probably she won't wait in the line. It'll involve some kind of device, probably a retina scan. Kai, back in the green room, we were talking about your brand new iPhone, and we were talking about facial recognition. In the future, financial services will be able to use this type of thing to completely streamline processes. 2 things. Is that a good thing or a bad thing? And also, do you think that we're ready for it? Do you think we're open enough? Do you think institutions are open enough to this type of fundamental change?
Well, I think that the answer to that is yes, yes, yes. I think that there's no choice. We have to, if we are going to try to bring finance to the larger public, and not just a small group of people, we're going to have to find a way of lowering the price point of doing business, and technology is extremely important for that. At Prudential, for example, in Singapore, we are now doing an ability to open an account and open an insurance policy for someone all online, with completely done within a few minutes, and an ability to do all the checks and the underwriting and everything at the same time. That just creates a much better customer experience and also reduces the price point. I think that people are going to be, there's some talk also about being able to do health underwriting by just taking someone's picture and from your face being able to tell what sort of diseases you're prone to, etc. That sounds a bit scary. Some people may not like that. But I think that if you look at the demographics of the world, younger people are much more willing to forsake some of their privacy for the sake of better service and better prices. But as Vikram just said, it's a long journey. It'll take time to change culture, etc. But it's really important to get the technology in place to lower the price points.
Okay, right. When we came out on stage, I'm sorry to tell you that your applause was rather underwhelming, so I need to get all of you involved right now. Can you put your hand up and tell me if you've been to China recently? Gosh, it's not as many as I thought it would be. Okay, and keep your hand up, those of you who've been to China recently, if you've noticed the fact that you probably weren't going to be able to use cash. All right, so we need to enlighten the rest of you, which is a huge number. Calvin, tell us a bit about the Chinese experience.
I think China is experiencing significant revolution in the financial services industry. Cashless, I think, is a topic that you shouldn't miss. I think in various cities in China, taking Hangzhou, for example, 98% of the transportation system all goes cashless, or in a way to say that they accept WePayment or e-payment. The e-payment options or mobile payment options extend not only to you buy certain items from merchants, but also covering street performers. You go to temples, you buy a Chinese dim sum bun on the street. So it's very extensive. So this we will see as a trend extending gradually to many different cities in China. And it's just amazing to see that it's just in the past 3 years, it achieved so much success and progress.
Is this our future reality? Will we be working wherever we are in the world? Will we be walking into our local restaurant or engaging services at the roadside, for example, simply by scanning a barcode? Is that the reality we're looking at?
I think so, but I think different governments, they embrace innovation, the speed, and also the way that they open up the regulation will be very much different. So let's say if you look at India, right? So I think so far, in terms of electronic payments, it covers virtually only 5 to 10% of the overall payment. But whereas, in China, it covers over 70%, towards 80%. So I think the pace could be different, but I think the direction would be pretty much the same, ultimately.
Vikram, let's bring it back to you.
Yep.
With your wide experience, when we talked about the juncture earlier, and we talked about being ready, that's great if you have the network, if you have the mobile technology, if you've jumped to that point. But that's not the case. You've come in from the US where you still have a lot of legacy systems in place, where surprisingly, even though Venmo, for example, PayPal's payment system has become practically a verb, Venmo me the money, or whatever it is. With the incumbent banks, there's still that lack of movement.
Well, I think it can seem that way, no question, and it still is a financial system that is towards the tail end of the recovery from the crisis that it went through. So there are lots of special factors in the US. But having said that, a lot of the banks are moving very fast. JP Morgan just announced something called Fin, which is a completely automated digital bank, and they're actually starting in states where they're not allowed to take deposits to see how it works. And so that's just one example. A lot of things are happening. Here's what's going on, though. I think there are two types of changes that are occurring. There is a clear distinction happening between transactional finance and strategic finance. Strategic finance for a corporation is capital structure, right? Well, who should I buy? Strategic finance for a customer or consumer is financial planning. How should I think about my children? Transactional finance is payments. Get a loan, get a card, get mortgages. Anything that's transactional finance is moving fast into a unbundling mode away from banks, with a lot of these activities getting rebundled around commerce. So payments is 7 lines of code if you want to buy something, okay? Mortgages should be bundled around buying homes. So the shift that's happening, even in the US, and it's happening in a methodical way, is transactional finances are getting unbundled from the banks and rebundled around people who are involved in the commerce where customers actually have a need to get those services. The other concept is one of shallow work and deep work. Deep work is cognitive, deep thinking, the shallow work is more repetitive tasks, and you're seeing a lot of the repetitive tasks getting done either in an automated way, robotics and things of that sort, but also there are lots of providers of operating systems and other software who can get those things done. You may not see it all, but the pace of this occurring is very fast. And the question we've got to ask ourselves is, where is that line between transactional and strategic finance? Where is that line between shallow work and deep work? And the one thing I do know is all things going on with neural networks and artificial intelligence keep pushing those lines further in. It's happening.
So with those lines being pushed further and further, Kai, it seems to me that there's no answer to that question, which is difficult when you're a leader. It's difficult when, you're working in this sector and you're thinking, well, how am I supposed to upskill? How am I supposed to prepare for the future in this industry if those lines keep moving and I don't know what's coming next?
Well, I think there's so much to be done that trying to figure out what to do is not that big a problem. I think that it's a question of prioritizing. In any of the boardrooms that I sit in, there isn't a single boardroom that is not very focused on digital, whether it's on cybersecurity or it's on lowering price points or treating customers better or actually just doing basic things. For example, if you're a bank, and we all have to have a significant amount of compliance these days, you end up with a variety of alerts that you have to generate every month based on various sanctions lists and other compliance factors. Now, a typical bank could have 15, 20,000 of these happening every day. And to have an army of people sifting through these to figure out which ones are really important, which ones are not, doesn't make a lot of sense. If you use machine learning to be able to sift through that material, you can throw out the 5% or so of those alerts that really make sense, that need to be sent to the regulator to take action on. So it's taking those sort of tasks that are very boring, repetitive, and frankly quite soul-destroying if you have to do that. Take that away and get those people to do much more higher valued stuff. There's a lot to be done there. There's a significant amount to be done in digitizing the interface with customers, but some of that can be a bit cosmetic, because if you don't change the back end, you don't really get the benefit out of that. And then finally, I would say that banks have been very protective of their data. And if you look at the insurance companies in somewhere like China, they're much more willing to share their data, even with their competitors, if they feel that they can get a better competitive market and they can get more people buying insurance. Banks are going to have to find a way of opening up their platforms to have a variety of FinTech companies come and collaborate with them on those platforms. Of course, doing it in a safe, secure manner and ensuring privacy, et cetera. But that's the challenge.
That's the challenge, but it seems inevitable that we have to move on from this conversation that we keep having about disruption, everything being disrupted. Okay, fine, it's been disrupted, what do you do next? And collaboration seems to come up a lot in every report that you read about this topic. Calvin, in your experience, especially working with these Chinese companies, is that what you think needs to happen? And also, can I just, within that, raise the issue of, yes, collaboration, but also regulation. And in China, you see a great force in terms of how that can happen.
I think definitely the overall business model of each financial institution needs to be more inclusive. I think ultimately, when you look at FinTech, it disrupts traditional financial services play into different verticals, right? So out of each verticals, right, you see new technology or new business model coming out. But that, the most important thing is that what you are serving here are the customers. So I think through technological advancement, I think, we see what we see is that the customers are in greater power. They are dominating the play, right? So, but these customers, most of them, if you look at globally, currently in the world, what we call the Generation Y, they constitute, over 1/4 of the global population. So these are the people that they are digital natives, right? So facing these people, they are also internet users. So it's not about how you serve your customer, but it's actually how you serve your customer, who are also internet customers, right? So it's to inbuild the digital DNA into the traditional play. So I think this is very important, that you embrace innovation, you disrupt yourself before competition does, right? So ultimately, I would say that you need collaboration. And you need collaboration not only for one or into with one particular fintech company, but into different verticals or different dimensional. You might need different technological supporter, enabler, and business cooperating parties.
I like this. I find this quite interesting, actually, this idea of disrupt yourself before you're disrupted. Vikram, what do you think of that?
Well, it's not easy, is what I think about it. You know, when you look around, there are, let's separate it out. One, if you say modernize, I get that. And modernization, for example, is make sure you're completely focused on the consumer and the customer and give them the experience at the price point and in the way they want it. Go run hard to compete to keep your customer. That's modernization. But Kai said this before, you can't have a 21st century front end and a 20th century back end. Okay, completely redo your supply chain at the back to ensure that it is in line with what's happening elsewhere. That's modernization. And the last thing is embrace competition. That's not about, you can call it disruption, I'm not sure. I think that's modernization. I think every institution has to modernize. And I think that's where the world is going. I think every large institution is going to try to modernize, and I think I heard a little bit of a sense of trying to make sure, should we be, you know, pessimistic, optimistic? I'd be optimistic about it. You take the element of fear completely out of this evolution. My experience in any market and any financial sector where you increase efficiency, is volumes go up a lot, needs go up. You actually find an industry that's much larger than what you started with. It just happens that it is at a different price point. Everybody still makes money. Okay, consumers are better served. No, it's not all going to go to the big banks. It's going to be an ecosystem that's full with some large banks, but lots of other players as well. That's where we're headed. And banks have a big role to play in that.
This word about the ecosystem comes up a lot, and so you know we can maybe look at that a little bit later. But before we do, I wanted to ask you about corporate finance. Mm-hmm. So we've talked a lot about on the retail side, yeah. And I'm sure there's a lot of people in this room who are in corporate finance who want to understand what this future vision means for them. Mm-hmm. And this is an area where, on the periphery, we're seeing ways in which there can be change, and FinTech can be used to make systems more efficient. But at its core, it's about human relationships. Nothing can replace that.
Well, look, I think corporate finance is one of those elements that clearly falls in the category of strategic finance today. And there is still that need for advice. There's still that need for appreciating your client is a human being and they have behavioral attributes that need to be understood. And so those needs continue. But let me tell you how it does get affected. For example, your husband is corporate finance, I guess, is that right? Okay, well, he'll come home at 5 o'clock every day because there'll be a machine doing a lot of the analytics and model building and other work for him, okay? Let me tell you how else it changes. You can go on a company called Kensho and you can ask it, hey, what stock should I buy if oil drops below 50? And just in natural language, it'll start giving you those inputs. So don't underestimate the impact of machine learning, artificial intelligence, and everything else in pushing out this work stream of building models and spreadsheets. And so the tasks get much more cognitive. They get much more interesting. They are about the client that way. And hopefully that means you see your husband a lot more often.
He's in the audience. I'm not saying anything. Yeah. I'm not saying anything. Kai, bearing that in mind then, looking at the future landscape, it does bring into question then all those people who do those jobs. What do they do? And what does that, from an employment point of view, what does that landscape look like?
Well, I mean, clearly that's going to be a worry for a lot of people. And I don't think that we should minimize it. And if I can just make a plug for Singapore, my country, I mean, basically, it's got one of the few governments around the world that is not just talking about it, but actually putting real money and effort behind retooling people, encouraging them to reskill themselves. I think there's going to be a huge responsibility on the governments and communities to make sure that they encourage that. Lifelong learning becomes a much more important issue than just go to university when you're 20, 21 years old and then don't study after that. But I just want to come back to an earlier point, which is when you look at financial services, one of the big things that's happened since 2008 is that the regulators got very upset with the way that financial services companies operated. And in essence, what's happened is that the amount of capital you need has more or less doubled, or even gone up more than that. So if you're doing the same business with double the capital, you're going to make half the money. And the only way you're going to still be profitable is if you can get your price point down. And so it is an existential issue for financial services to embrace machine learning, technology, et cetera. And the outcome of it is that you will release people from doing very repetitive, boring jobs. And hopefully, some of them, not all of them, will be able to be retooled into doing other things or higher level things in the same area. So if we had all said that we shouldn't have tractors, and farm labor gets displaced when you have tractors, well, you can see the absurdity of that point today. We're similarly in that sort of place. We can't hold back progress just because it's going to displace people. We have to work on that problem to find roles for those individuals.
Yeah, and picking up on that, you mentioned Singapore, which I think you can go ahead and plug your country. It's the Singapore FinTech Festival. Come on. So that's great. And Singapore is leaps and bounds ahead in doing this. Calvin, you, in your experience, also in China, you meet so many innovators, and you're working with companies that are doing such, there's so much money going into this. Do you think that's also an imperative for various governments all over the world to make sure that that funding is there? And I don't know if it's Hong Kong dollars or US dollars, but billions you're putting behind this.
Absolutely. I think, in order to make the society more tech-enabled, you need the whole value chain to embrace it. So the whole value chain means you need government, you need institution, you need the participant, but you also need, for example, like the investor or the buy-side pocket as well. So, and ultimately, obviously, the customers. So I think, it's something that you need many money to put into it, not only from AMTD, right, but from, the various others, not only in one single country, but across, the globe, right? So I think this has been gradually building up a power of force to make the society forward. And I think, but out of those, right, most importantly, we see are still talent cultivation. Because I think I very much agree that, in a way, you cannot have robot to replacing everything, right? Well, at least, from a human being, right, we should believe that, we still have, our values ultimately to best leverage on what the technology or robotics or algorithm can help us to better up our decision, right? Ultimately, I think, talents are still very much most important. So either the new talents, the youth, right, how we cultivate them, but also the, for example, the more mature working class of people, how we could upskill their knowledge, right? So I think, this is a point that we see lots of merits in what Singapore has done. You have the lifelong learning program, you have the skills future, all this and that. I think, similarly in China, you see many very successful tech companies. For example, like Huawei, they have, big, park or scientific park within China, in Shenzhen, in different areas, trying to do a lot more researches, but provide more, situation context for people to experience and learn.
Yeah, I've got my eye on the time. We're going to start wrapping things up, and I just have two questions really that remain. The first one was, and we touched on this earlier, rather than disruption, we talk about collaboration. I want to get a comment from each of the three of you about where and how you want to see that collaboration. Vikram, perhaps we'll start with you.
Well, I think a lot of that's already happening. A good part of collaboration is having banks have the ability to have open APIs to have a variety of different companies that can serve their clients in a different way, tap into the system they have. Hopefully, if they do that well, they keep their customer, but also give them that experience. I think that's a very good example of collaboration, and it's happening extremely well in Singapore. From everything I've read and everything I've seen and the CEOs I've talked to, they're well on that way, and that's a great first step.
Kai?
Yeah, I mean, I think, at Prudential, for example, we worked with Google on their unit Apogee to do open source APIs that other vendors can come in. But I just wanted to have a quick interjection on the issue of finance. I'd say there are a lot of FinTech companies here, and there's a lot of private equity money and other hedge fund money that's available for FinTech, but they should not ignore the fact that pretty much every financial institution that I know of has their own innovation labs and innovation funds that they're willing to invest in strategic entities. So having that discussion directly with the financial institution is also a path that I would recommend to the FinTech companies as a good source of funding. And those institutions have the customer base, they know what the problem is. You as a FinTech company can be the problem solver rather than just trying to go disrupt something.
Okay, Calvin?
What I want to see is more collaboration between the newcomers into the industry with the traditional players, right? Because usually, I think, or previously, the world has been more dominated by the bigger players, or historically, the bulge brackets, if we're talking about in investment banking. So I think, the new players to the market, bring new ideas, new thinking, right? And then there are a lot more grounds to collaborate. I think among or in between the traditional play and also the new economy play. So I think just one word to add on is that, for example, AMTD, we invest a lot into FinTech. So I think as a very active tech investor, we are paving way for our readiness towards digitalization.
Do you think we'll ever see a tech takeover bank or a bank tech merger or something like that?
You mean for us, right?
Well, in the industry, amongst the big names.
Well, I mean, France
Vikram,
Telecom just, was it Orange or France? I think it's Orange, which is a telecom company in France, just bought a bank. Anybody who has distribution, whether it's a telecom company or a cable company, a wireless company, a logistics company, can very easily take transactional finance and bundle it in. It's happening.
It's happening.
They may not want to buy the bank because banks are, still quite challenged in their business model. So I think that they will, as Vikram just said, they'll pick off the different parts of a bank, the different transaction side, but they may not want to buy the whole thing.
I love that you've raised that point so late in the conversation. We could have done with that earlier. Just to finalize, we only have 3 minutes left, so I'm going to put the pressure on the three of you. And we're going to work this way, backwards, all the way to Vikram. I think it's inevitable. We know that people need banking, but do we need banks?
I think we need banks, right? Because, in terms of how the new concept of banking would work, it's very much crafted, by the way that the technological advancement, in the future, and the overall, I think the banking concept, I think, have been evolved a lot, right? So I think it depends on regulation-wise, how the regulators want or how much opening up of what we call the banking sector towards the different verticals. I think secondly, I think it's also depends on the customers. I think because it's very much, as we said, the power of a consumer is actually increased a lot. And finally, I think it's also about, globalization. It's not just one single country can drive the process. I think it's a global process.
Okay, Kai, the same question for you.
Well, I don't think you'll see banks in the future being the way they are today. I think they'll be more in the nature of aggregators, and the banks that are able to open up their system and collaborate with a bunch of various vendors that can come in and help them will be very important. There'll be a core activity around the trust that the customer has with the bank. I mean, even though banks are just generally not liked very much these days because of the financial crisis, et cetera, at the end of the day, there's still trust that the bank is going to take care of your money and give it back to you when you want it. And with all that's happening on the internet with cyber, et cetera, there's a great concern of that. And I think to replace that is going to be very difficult.
Okay, Vikram?
So we're all used to banks in the context of an institutional architecture. We think about bank as the place, and like bookstore is the place to go to get books. And what we really want are the functions that are played by the bank, not necessarily the institutional architecture. That's what's happening. That change is happening. Your question as to whether they're going to be banks or not, only a regulator can answer that. Okay? The one bank that I know we always need is the central bank and the MAS.
Yeah. And we haven't even got into how blockchain could link all the central banks. Maybe we can do that one next year. So I'm afraid, guys, with 42 seconds left, we have to end it there. Calvin Choi, Kai Nargolwala, and Vikram Pandit, thank you so much. Please, a huge round of applause this time for our panelists. Thanks for being an excellent audience. And if you see my husband, please tell him to be home by 5. Thanks.